Now, it shouldn't exactly be surprising to you when I say that the sanctions against Russia for this invasion of Ukraine haven't exactly had the intended effect so far. Now, to be clear, they have had an effect. They have hugely impacted millions of people across Russia. They have reduced the wealth of Russia, despite what certain nominal figures might suggest. And when we're looking at the military support given to Ukraine, really that can't be understated. But the desired effect from these sanctions that have been inflicted against Russia time after time after time have clearly not been as impactful as the West would have hoped. Of course, when the war kicked off and these sanctions were being talked about and everyone was really grand and had ambitious ideas of just how much they were going to punish Russia, the ruble dropped. The Russian economy pretty much collapsed overnight. Inflation soared to ridiculous levels, and the Russian central bank had to raise interest rates by 20% overnight to prevent the currency from literally collapsing. But that was now multiple months ago, and if you look at any news article talking about the Russian ruble today, all they talk about is how well it's doing, how it's recovered past its pre-war point, and how it's actually at multi-war highs. Now, in reality, this ruble price level isn't real because it isn't operating in a free market. There are restrictions against Westerners from buying and selling rubles, and there are also restrictions against Russians from buying and selling rubles, meaning that the only market participants are the Russian government and the people who are pretty much forced to work with them. So no, it isn't quite as bad as it might seem, but the truth is that yes, sanctions have not been as effective as initially planned. Now, a big part of this is because actually the sanctions that were initially planned never really came to fruition. We had a whole load of stink. We had weeks and weeks upon arguments or discussions between various countries in the EU and around the rest of the world regarding cutting Russia off from SWIFT, the international bank payment system. For a while, it looked like it was actually going to go through, that Russia would become a pariah state where their banks and businesses and people couldn't even operate with other banks in different countries around the world. But by the end of it, it kind of fizzled out and turned out into a whole load of nothing. Small companies and small banks, people and individuals, institutions that just didn't really matter found themselves punished, while Sberbank and Gazprom Bank, the biggest companies, the biggest institutions which really made most of the transactions overseas with other countries and other companies, they got off completely scot-free. Now, don't get it twisted though, the EU and the West is still steadfast in their support for Ukraine, and actually they are inflicting more sanctions against Russia, hoping that eventually they get to a point where they can actually make a difference. And it's starting with this, targeting oil imports from Russia into the EU in particular, coming straight from the EU, as you can see. So what exactly is going on here? Well, the plan is that immediately 75% of crude oil products that are exported from Russia into Europe will be stopped immediately. And by the end of 2022, that number is going to be as high as 90%. Now, the caveats there are that crude oil transported by pipe to Hungary, Czechia, and Slovakia, because they need that oil to survive. They can't really cope without it. Their economies are so intensely dependent on it. Well, they will be allowed to continue to import oil, but at some point in the future, they're going to need to find new sources. They're going to have to create facilities and invest in infrastructure so that they can't import that oil in the future. Now, with markets looking so volatile right now in pretty much every sector and asset class, people are more than ever looking to alternatives, which is perfect timing because with unprecedented volatility and high inflation rates, JP Morgan recently stated that alternative assets are no longer optional for people and their investments. So to meet this increased demand for alternatives, fintech platforms are stepping up and giving people access to investments that they would have only dreamed of in the past. Now, one of them, and my personal favorite, offers a unique asset that's been long celebrated as a way to store wealth. In fact, the ultra wealthy have been using it for decades, and now 85% of wealth managers recommend that modern investors do the same. But where previously it's been far out of our price range, now it can be yours in a few clicks thanks to Masterworks. Now, Masterworks is a revolutionary investing platform that lets you become a stakeholder in multi-million-dollar artworks without needing millions to invest. And since I've started talking about them on this channel as a sponsor, they've been blown away by the response from you guys, with over 2,000 of you having signed up. Now, each of the 3 paintings that Masterworks have sold have returned over 30% net IRR to their investors. Now, legally, I have to add that past performance is no guarantee of future results, but 30+% is pretty amazing. If you want to join other Stoic Finance subscribers, it's as easy as clicking my special link in the description to skip their waitlist and get started on Masterworks. Essentially, what the EU is trying to do here is ensure that Western countries stop funding the Russian government. It's no secret, but this money pretty much goes straight into the hand of Putin and his cronies and the military-industrial complex of Russia, and it means that it funds the war in Ukraine, it funds the murder of civilians, and these bombings of civilian populations and all sorts of things. So the basic aim here is to inflict pressure onto Russia, to cut their expenses, to cut their income, and ensure that they can't fund this war into the future. Now, the problem with this is that this will also cost Europe money, and it isn't immediate, but it does happen in a roundabout way. Now, just not buying oil from Russia obviously doesn't cost anyone money, but it reduces the total amount of supply that people can buy oil of. If you have a big pile of product and you cut half of it off and say, no, we're not buying from this supplier, well, then you're forced to go to the other supplier, and suddenly prices rise. Now, this has already taken effect. As you can see from this headline, oil prices have jumped. At the time of me speaking right now, Brent crude oil is sitting at about $120 a barrel, a really high level that we haven't seen in months, and which should inflict massive pain across every industry in the West, because every industry is hugely dependent on gas and oil prices. Now, this is the sixth package of sanctions that the EU is inflicting against Russia. But once again, the real crux of the issue, the real thing that needs to be targeted if the EU wants these sanctions to be successful and effective, natural gas imports, is pretty much left entirely out. Now, why is this the case? Well, partly because it would be costly on Europe, but mainly it's because it would be costly on the wrong part of Europe. And of course, I'm talking about Germany, who only cares about Germany's economy. We saw the exact same thing happen with the Greece debt crisis back about a decade ago, where Germany pretty much threw Greece under the bus because they didn't want to foot that bill. We're seeing the exact same thing happen right now. Germany would rather continue to pay for gas for Russia, get it back from them, send the money over there, and they are in full knowledge that that money goes straight into funding the war in Ukraine. They just don't care. They've been actually trying to halt military support to Ukraine for years now. They forced British planes to fly around German airspace, for instance, just to try and make it a little bit more difficult to arm Ukraine prior to this invasion. And now that the invasion has taken place, now that the true extent of this war has become fully realized, Germany has realized that there was awful bad PR on their part, but they are still dragging their feet at every possible opportunity, pledging weapons that never arrive, pledging humanitarian aid that just never quite arrive. Now, the EU is also talking about and planning to finally sanction Sberbank and a couple of other banks in this sanctions package. Now, I mentioned earlier how the SWIFT ban was supposed to be swift and fast and really quick and effective, and it was supposed to cut Russia off from financing from the rest of the world, but it never really came to fruition. And again, a lot of that opposition came from Germany, but some other countries too. Now, Sberbank was supposed to be the main target, right? When they invaded, it was the biggest bank. It was the first one that everyone talked about attacking, but it never really came to fruition and it got off scot-free. But apparently now the EU is planning to finally cut Sberbank off from SWIFT. Conveniently, they've left it long enough that actually Sberbank can probably operate without SWIFT now. They do have their own system. It was entirely untested at the beginning of the year, but nowadays, they're probably fine, and this really won't be too impactful, which, let's not forget, is probably by design. The EU doesn't actually want this bank to collapse. It provides valuable funding for natural gas and crude oil excavation and export and things like that, and the EU wants that to continue. They just want to be seen to be helping. Now, what this sanctions package isn't going to attack, though, is Gazprom Bank, which is the bank which handles settling for natural gas payments. Again, natural gas is actually far more important in terms of the exports from Russia into the EU, and this bank settles all of those transactions. So the EU aren't playing around there. They aren't even going to pretend to be seen to be doing some good here. They're just going to leave it off the table, never even address it, and pretend that there isn't a problem there. Now, there is plenty of criticism being levied at the EU, and it's been levied at them for this entire year so far, and it's being levied at them for this sanctions package again, which is basically being said to be too little, too late, and frankly, it's hard to disagree with them. The fact is that this war has been going on for months now, and it has seen people and countries dragging their feet at every possible opportunity. And when people who are defending against these sanctions in Russia know what they're defending against, they're given time to prepare countermeasures, to prepare backup systems. Russia's own banking system that allows it to settle with banks abroad is now in place and working fine. There's also the huge issue that actually $60 billion has already been paid to the Russian government by European governments since Ukraine was invaded. That's $60 billion into the hands of the people who made the decision to invade a country, start a war, and kill tens or hundreds of thousands of people. Now, 60 billion may not sound like a lot if you're used to talking about money in terms of the US government budget, but for Russia, that's a very hefty sum, more than their entire military budget per year, gone to them in the course of about 4 months from what should be Russia's enemies. These sanctions also distinctly miss out any sanctions on natural gas, meaning that that money, that $60 billion, well, it's going to continue to mount up. That money is going to continue to flow, and Russia is going to remain solvent. They're going to have loads of cash to continue to fund their military, to pay their soldiers, and continue this war in Ukraine. Now, the reality is here that, yes, the EU and Europe in general is in between a rock and a hard place. They can't allow Ukraine to lose its ground, to lose its country, and to be fully invaded by Russia. Russia is clearly a hostile foreign state, and they are also unwilling or unable to accept the price of actually standing up to Russia, whether it be through the military dead if they were to get militarily involved themselves, or from just the economic hit from standing up to Russia with sanctions. We hear a lot about people likening this period to appeasement prior to the Second World War, where Western leaders and the Neville Chamberlain, for example, were happy to give Hitler what he wanted because they thought it avoided war, when in reality, it just prolonged it to a later date when Germany was even more prepared. What we see now are people who aren't willing to send soldiers to die, and they also aren't willing to see money out of their pocket in order to stop Ukraine from being taken over by Russia. Now, if the populace thinks that, if that's how they genuinely feel, then a government can't fight against Russia. It just isn't feasible, and that's a lot of what we're seeing right now. Now, finally, before we sign off for the day, another major problem that we're seeing a lot of is, of course, inflation. We've been talking about it on this channel for over a year now, and mainstream media, the rest of the world, is finally waking up, but it did take them far too damn long. Now, of course, the EU has not been immune from inflation either. The European Central Bank decided to go willy-nilly and print money at will as well. And Germany now has seen its highest inflation level in almost 60 years of 8.1%, and across the rest of the EU, it's even worse. The simple truth is here that sanctions on Russia have significantly contributed to this inflation level, and they're going to continue to contribute to it into the future as well. Everyone and their mum is going to disagree with each other over whether or not this is worth it, to how much extent they should oppose Russia if it costs them money in their pockets, if it causes prices to rise. There are lots of differing opinions, and the only thing that we know for sure is that there actually isn't really much of a consensus. Now, lots of pundits in the investment and finance space especially are saying that inflation has peaked, that it's done, that we're not going to see any higher levels, but personally, I'm not so sure, and that's for a couple different reasons. Firstly, the most recent Chinese lockdown is nearing its end. These massive cities of Beijing and Shanghai are opening back up. People are being allowed to go back into factories, to go back to work, to start spending their money again. And as a result of that, oil prices are going to start going higher again because there's going to be increased demand for China. Now, oil prices impact every single business in the world because every single business uses some kind of hardware or some kind of energy. And it is so interconnected, it's so interwoven into our supply chains that nothing is free from oil prices, despite what many people would have you believe. The sanction packets coming out of the EU and the US and the UK and every other Western nation are not stopping either. They may be slowing down slightly, but they are not on their way out, and we can expect them to continue to come. Now, the problem here is that actually they're not working so far, but they are impacting our inflation back at home. So as a result, we basically have two ways out here. Either the war ends, either Russia is beaten, driven back from Ukraine, or Russia wins the war and drives through into Ukraine and takes it over, or the West gives up. It stops having the will to oppose Russia. It decides that the cost isn't worth it, and it pulls back the sanctions on its own. Frankly, we don't know where this is going to end. We don't know when the war in Ukraine is going to end. Russia did not have their lightning victory militarily. They've been almost completely failing at every opportunity, and they have without a doubt not even come close to fulfilling any of their objectives. On the other side, though, a recession is coming in the EU, the UK, and the US in particular. In my opinion, it's already really here. Now, that will dampen inflation, it will reduce demand, but it will also cause far more harm and far more hurt for average people in the near term, in the short term. And the question is whether or not Western governments are going to have the resolve to maintain these sanctions through that pain. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. They can help you protect your portfolio against market turmoil through fractional shares of art from world famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, a site that allows you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you think that crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.